Good evening, everyone. Time for another silver update. What you're looking at here is a 8-hour chart of the Japanese yen versus the US dollar. If you've been following my videos, you know I've covered this a number of times. This is the Fukushima disaster, and there's some other points here that are of significance. But the main thing I wanted to point out, and I'm going to use this to segue into the silver market, but first off, I wanted to explain how technical analysis works. I've covered Jesse Livermore in the past. If you remember, Jesse Livermore was a bucket shop trader, and he learned how to trade the technicals based on the ticker and the movement in the ticker, and specifically the rapidity of trades, which equals volume at that time. So volume is a very key, important indicator to understand what is happening in a market. Remember that the price action in a market is what has happened. It doesn't necessarily predict what's going to happen, but it does tell you what has happened, and that's very important information. So the anomalous technical information that I wanted to make you aware of is in this chart, and especially I'm going to bring up the volume to show you next, but the key places I wanted to point out are these rapid spikes in the price. You can see there's one here, there's a significant one here, there's a very obvious one here, and you can see one here. Now, the reason why I'm bringing up the Japanese yen is because we know it's been publicly admitted that this is central bank intervention. So in the case of the silver market, we don't have public admission of central bank intervention. In fact, there's no admission at all that the central banks are involved in the silver market at all, but that they're bullion banks, etc. But in the case of the Japanese yen, we know through public admissions that the G7 and the Bank of Japan and the Federal Reserve have been involved in the intervention of the yen. So now that we have these points, these suspicious technical points that we're looking at, 1, 2, 3, and 4, let's pull up the volume so we can look at how the volume corresponds to these points. And what you see when you pull up the volume is you find that it is consistent with the story that we want to explain here, in that you can see, beginning with the first one, we have a technical breakdown in the yen, and then a very violent spike in volume right there at this point, follow-up volume spike in here. And this was a central bank intervention, admittedly. We have something similar here. We have a technical breakdown and then an intervention. We very obviously have it here. You can see the follow-through. And if you look closely, let's go closer into August so we can get a more granular view. And you can see you had a technical sell-off with a whipsaw. And then you had a test, and then you had violent central bank intervention right here. Now, I've covered this before. What is the point of this intervention? Well, if you look at this price differential between the technical low, well, there's the breakdown, first of all, which is roughly in here somewhere. And then you have the low. And if you look percentage-wise, this is a large move. So this type of intervention is something that blows all the stops. So for example, this is a normal trending market downdraft on fairly steady volume. These players are Forex traders that are betting primarily based on either fundamentals or technicals. Obviously, this technical breakdown here is going to bring in a lot of technical traders as you saw, but not on significant volume. This is just a lot of people seeing a technical breakdown. Obviously, the people that bet up here and up here are fundamental traders, more likely, that had a view towards where things must go. A lot of these are technical traders. Nevertheless, it doesn't really matter whether the position was entered because of a technical or a fundamental reason. Ideally, a trade is entered for both technical and fundamental reasons. So you see more violent moves in these areas where you have a technical breakdown because a lot of the fundamental traders were waiting for a technical confirmation to get on board. And then you have this technical breakdown and reaction, and you have the follow-off selling, which is just pretty much people piling on to the trade that is obviously a winning trade as it goes down and down and down and down until it approaches another technical breakdown and central bank intervention. Now, if you notice, the reaction on the central bank intervention is a violent shakeout. This, if any of these traders would have put stops, and normally you put your stops above your position. Normally, if you're trading, let's say that the traders started at this point here to trade this, you're going to have stops somewhere in here. So the guy who sells here is going to put a stop up here. The guy here is going to put a stop somewhere up here, etc., 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 on down the line. Obviously, to protect their position from being blown out. And what do you get? You actually get, at the central bank intervention point, you get a complete blowout of all these positions. So why do they do that? The reason why they do that is this is government interference in markets. And the governments are opposing the fundamental and technical picture that is taking place. And that's the reason for their intervention. They don't like free markets. They don't like the facts that are being revealed by free markets. So that's why I brought up the Japanese yen. This is an example of openly admitted manipulation of markets. So we can see the pattern. Now, I wanted to look at the silver market in comparison. And when you look at the silver market in comparison, the first thing that really comes out, and let's get to the 4-hour here because it's the most telling. The first thing that really comes out is that in the silver market, it's quite the opposite of the yen dollar. You very rarely have violent moves to the upside, drastic upside moves. You have one here I'm trying to point out as a breakout, but you can see there really isn't a volume confirmation anywhere in there. This is really just people kind of piling onto a trade that they see as being profitable. You've got increasing volume going all the way up here, but your massive volume, like this spike here, when we had the $50, the crash down, and this spike, you can see your massive volume in silver is on the downside. Here's a massive move to the downside. Now, if you want to look at the buying, you can see that it's gradual. You see that your rising price comes on decreasing volume. Why is that? Why is it that the buying, the upside movement in the silver price is accompanied by low-level volume accumulation, but the downside moves are accompanied by drastic volume sell-offs? Well, I think you know where I'm going. The point is that it's manipulation. In the case of the silver market, you have a bunch of people who see the reality of why silver must go much higher, who are slowly piling on, and then you have the manipulators crashing the market. Exactly the opposite of what you see in the yen. So this is admitted intervention. It has all the same patterns, all the same spikes, all the same punishment of technical and fundamental traders trying to get onto a sure thing. and then the central banks coming in. So I think that's more strong evidence the silver market is a manipulated market, that these are the powers that be that are interested in punishing anyone who sees the fundamental picture or even the technical picture, but primarily the fundamental picture. And the fundamental picture is that silver must go much, much higher in price. But woe to those who are in the paper markets, because if you're in the paper markets, you better be willing to take a delivery type position. If you're going to buy silver right here in the COMEX, you better be willing to take delivery. In other words, you better have that cash sitting around on the side and ready to pony up the full value of that contract, or they're going to take you out with one of these drops. And that's the purpose of these drops, is to take out any traders who see what inevitably must happen. They don't want anybody in for the ride. So that's a little bit more explanation of how the manipulation works. I think the signature is pretty clear when we compare to the admitted intervention of the Japanese yen, which is always spikes to the upside, and we can see the not admitted intervention in the silver market, which is always spikes to the downside. We can pretty much deduce who are the real traders and who are the manipulators in these markets. Now, I wanted to talk a little bit about my commentary yesterday. It got some reaction from people who were incensed by my taking political positions. I haven't had this channel long enough to make it clear my positions. I was adamantly opposed to the bailout that Bush instituted through his Treasury Secretary at the time, which was the bald-headed guy. I don't remember his name right now offhand. But, they threatened martial law, blah, 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 all this stuff. I was adamantly opposed to those because I'm adamantly opposed to big government and socialism. And I think Bush was quoted as saying something to the effect that we have to destroy capitalism to save it, or something like that, a ridiculous statement. So don't misunderstand, I'm not some kind of anti-Obama zealot. I am an anti-socialism and communism zealot. And to make that point even stronger, I wanted to segue into a very interesting site that was announced just yesterday and came online today. If you have been following the political news, you know that John Kasich became governor of Ohio, and he's known for being very conservative, and it just came out yesterday that his treasurer of the state, whose name is Josh Mandel, he actually put a new transparency site up. This is actually the Transparency Project, which is really interesting because transparency, if you remember, was what Obama promised when he was elected, and we have seen more obfuscation and hiding of the facts by this administration probably than any other. I mean, obviously there was very little transparency under Bush, but this transparency under Governor Kasich with this Josh Mandel, this is fascinating to see this come about. I don't know what is behind this, but it is fascinating to look at. Now, I just wanted to show you some of these numbers so you can see the utter hopelessness of the socialistic system that we're running in this country right now. So you have all these categories you can choose, and I'm going to link this site so you can do some research on your own. But I'm just going to take you to a couple of them so you can see. Let's go to higher education salary. So you pick that, and then you take the salary range. Let's start off with $100,000, and we will select between $100,000 and higher than $100,000, and we're going to sort salary high to low. Now, the first thing that's going to jump out at you is that there are 25 pages of these jobs. These are state workers. And you can see the highest salary is $500,000 a year. Now, some of these people are executives and directors and head coaches, of course. There's Jim Tressel of the Buckeyes, but here's a professor of internal medicine who makes $494,000 a year. What do you have to be in the private sector to get that kind of a wage? Now remember, I selected minimum 100,000. We're looking at 25 pages. There's approximately 300 on these pages. So you've got 25 pages of 300 people a page. This is just one state. These are their salaries. You wonder why we have a healthcare problem? Here's Ross Hart Hospital. Here's someone making $465,000 a year. Here are professors making $400,000 a year. Here's a chair. I don't know what the chair is, but there's a lot of chairs. It's $400,000 a year. Here's football coaches on the state payroll making $300,000+ a year. And it just goes on and on and on and on and on and on. Here's deans, interim deans, directors, soccer coaches, more professors, dean professors. Now, if you go down the list, so let's put it between, let's say, 50,000 and 100,000. Now, if you work in the private sector, you know that a $50,000 plus wage is a pretty good wage. $50,000 a year, roughly, if you want to calculate how you figure out the hourly on that. You can take the yearly salary and roughly have it, and it'll give you the hourly. So a $50,000 a year pay or salary, if you cut that in half, you get 25. It's roughly 25 bucks an hour. So now you can see here we've got an assistant professor making 100,000. See all the assistant professors. We've got research scientists. Here's all our nurses making nearly $100,000. So in the private sector, to be $100,000, you need to be the top of the food chain of whatever business you're in, not in the government. So let's go and look at, say, let's go down to page 12 and take a look at some of our lower level people here. Here's a professor of social work, makes 90 grand. Here's an associate professor of a research team that makes 90 grand. And an English professor. Here's someone who just does social work. An officer doing social work making 90 grand. Of course, the hospitals. All the nurses making $90,000. Page after page after page after page. Now, the people being taxed to pay these salaries, and this isn't even the benefits. We're not looking at the benefits of these people, which you know are far better than your benefits. So, to have Kasich come out and have his state treasurer publish these figures, I think when the public sees these numbers and the fact that anybody would be talking about raising taxes, I think you could probably go and cut these salaries in half, every single one of them, and you would have people in the private sector begging for these jobs. So there's an example, folks, of socialism, just like I talked about yesterday. It is a recipe for utter bankruptcy. You can tell by looking at these salaries there is absolutely no way back. We are going into a complete collapse because there is no way that a diminishing private sector can pay these ridiculous salaries and benefits. This is just one state. And I challenge you to go ahead and look at all of these. You want to see something that will shock you? Take a look at the federal salaries and do 100,000 plus and sort by high to low. And look at this. Here's all your doctors in the Department of Veterans Affairs. Hundreds of them making $200,000 and $300,000 and above, while your large number of your veterans are committing suicide and are living on the streets. People, this is shameful. It is ridiculous. It is absurd. It is wrong. It is every evil thing you can imagine for this to be happening. But this is what's happening. So this is going to result in a complete collapse of the system. There is no way that a system like this can continue. And gold and silver are signaling that the system is going to collapse. Seeing these kind of figures makes it a certainty in my mind that this system is on its last legs. It must collapse. And we'll talk to you next time.